what's happening now in the economy is not, and whatever happens next, it won't be what you think it is. And it never is. When we go back and look at history and say, well, nobody was expecting that crash. Nobody ever expects crashes to occur, right? So, well, nobody saw that coming. All the signs are there, right? We have 1.5 trillion in these leveraged loans. We have an exceptional amount of margin debt. We have an exceptional amount of household debt. I mean, we're levered up to the hilt at this point, 10 years into an economic expansion. And all the Fed knows how to do at this point to try to keep it going is to cut rates. That should worry you, because that's how these things actually start. Judy Shelton is Trump's next pick for the Fed. She's a hypocrite and she's an idiot. She's a walking contradiction of her own statements. And here's the interesting thing. She makes a comment in 2017 that says, countries should not be allowed to lower interest rates to manipulate their currency because it's unfair to U.S. businesses. Okay? Other countries are suppressing their currency and lowering interest rates to give them an unfair advantage against the U.S. So, Ms. Shelton, should we lower interest rates in the U.S.? Absolutely. So what you're saying is, Ms. Shelton, is that it's completely fair and above board for the U.S. to manipulate currency, but it's not fair for anybody else to do it. Think about that for a minute. Concerns are starting to seep in a little bit about earnings because, again, as we take a look at what's happening with the forward earnings expectations, those continue to decline over concerns about economic growth. So it's not surprising that you're seeing weaker expectations. Analysts always get very excited at the beginning of the year. It's like, oh, we're going to be up 20% this year, and then they start tailoring it back. And again, you don't pay attention to a lot of the revisions. I do, but most people don't. What they look for is how many companies beat earnings on a particular quarter. And we always get, 60, 70, 80% of companies to beat estimates because we lower the bar enough that they can do that. If we held analysts to their original estimates, so we say at January the 1st, all you analysts make your earnings estimates for the end of this quarter. So everybody says, okay, everybody's going to earn $1. Perfect. Okay, we hold them to that dollar. That's what you said. So at the end of the quarter, let's see how good you are. If we did that, 100% of companies would miss estimates every quarter. That's it. That's how far off they are. They're generally overly optimistic by more than 33%. So if you held them at their original estimates, almost all companies would miss their earnings estimates almost every quarter. On Skype with us right now, of course, is Michael Leibowitz, CFA, of course, our co-portfolio manager at RIA Advisors. So, Mike, yesterday, the chairman of the Federal Reserve, Jerome Powell, up on Capitol Hill, making the case for potentially cutting rates at the end of this month. Now, interestingly enough, he didn't say he would cut rates, but he did lay out the case that the economy is weaker and that there are certainly some concerns here from both tariffs as well as looking at some of the global economic data that warrants potentially the Fed being a little bit more accommodative towards easing rates if necessary. But again, didn't actually say he would cut rates, but the markets are pricing in about 100% probability right now of at least one rate cut by the end of this month.
Yes, he didn't say that he was going to cut rates, but he said everything possible to allude to the fact that they will cut rates. And I think really what it comes down to is, are they going to do 25 or 50? The interesting thing about his speech was the Fed's two mandates are inflation and employment, right? And employment, as we've talked about, there are some weaknesses. But look, the unemployment rate's at a 50-year low. Jobless claims are near a 50-year low. And inflation has been in the same range as it's been in for the last 7-8 years. It's good news on the employment front, and there's nothing new on the inflation front. Yeah, it's slowing a little, but it's still well within the range of what it's been. But he harped instead on things like Brexit, on the federal debt ceiling, on trade, things that, yes, could happen and could affect the economy at some point in the future, but he really harped on those.
Right after the financial crisis, we did this whole thing called cash for clunkers. The government was paying people to trade in their used vehicles, which they then crushed them and took them out of the system. So what this left was this big dearth of vehicles, of used vehicles that people people like me want to buy, and raised the cost of used vehicles to the point that, guess what? It was cheaper to buy a brand new vehicle, which guess who that benefited? Yeah, you got it. That benefited the automakers. That was the whole plan about cash for clunkers. So this is what we're talking about just to catch you up. This is what we're talking about the last couple of weeks. And my wife was listening, and apparently, she never listens to the show unless it revolves around something she can buy.
Of course.
And she's like, hey, that's a good idea. He won't be mad at me at this. She's right. She got a great deal.
What color did she get?
She wanted white. They didn't have it, so she wound up with black.
It's a pollen magnet.
It's a pollen magnet. It's a dent magnet. It's a chip magnet. It's everything. My truck. The reason I know this is my truck that I traded in was black. One of the reasons I traded it in because it was black. My Toyota now is white for a reason. And it's because it looks like a stormtrooper.